Welcome to ExchangiFi, a platform to connect investors and advisors with ETF issuers to participate in 351 tax-deferred exchanges. A highly concentrated portfolio can create excessive volatility and is one of the biggest investment risks. ExchangiFi can help you diversify your portfolio into a newly launched, well-diversified ETF without incurring an immediate capital gains tax. On the homepage, here is our featured deal, an ETF that will launch soon. Click to learn more and connect with the fund issuer. There are just a few rules to participating in a 351 exchange. An ETF must follow the same strict diversification rules as a registered investment company under the Investment Company Act of 1940 and the Internal Revenue Code to maintain its special tax status. The basic rule is that the largest position cannot be more than 25% of the market value of the entire basket of securities that each individual investor contributes, and the top 5 positions cannot be more than 50% of the market value of the entire basket. ETFs are considered on a look-through basis, so the calculator will consider the individual securities held by the ETF. Here, you can play around with our manual portfolio calculator to understand the diversification rule. The second rule is that the securities must be liquid, so you can contribute stocks, ETFs, bonds, closed-end funds, anything that can be traded intraday, and cash does not count. The third rule is that the securities need to match the investment thesis of the fund. For example, if the fund is an emerging markets fund, you would not be able to contribute US large-cap growth stocks. However, if the fund is actively managed, then almost anything can be contributed.
Here are some successful syndicated 351 exchanges into ETFs that have already launched and how much was raised. You can register and log into the ExchangiFi platform to see all of the live deals listed here on the dashboard. If the strategies look interesting, click to see the full details of the fund and book a meeting with the fund manager. A 351 exchange must occur before the launch of the ETF. There is only one chance to contribute. Any ETF that is offering this opportunity to investors will be listed here and has been approved by the SEC, but has not launched yet. Typically, there is a 3 to 4 month window where the fund manager will meet with investors and gather interest. You can manage your account here. ExchangiFi's platform stores all data securely and is fully SOC 2 compliant, ensuring the highest standards for data protection and privacy. The platform is set up for advisors because most launches require an investor to be with an advisor on the institutional side of Fidelity or Schwab. Here is where you can create all of your clients' separate portfolio conversion plans for clients whose portfolio would benefit from a 351 exchange. Enter their information now or do it later. This information will be required for the exchange later on. Here, you can upload a spreadsheet of your positions to our exchange calculation tool. Download the template here, copy and paste the information into the columns, and upload to analyze. You can also enter the information manually. Our software will check for diversification requirements and calculate the capital gains tax deferral amount and total market value of the basket of securities to exchange into an ETF. The ExchangiFi platform is plugged into live market data, so the market values are correct up to the minute.
If you would like to only exchange some of a specific security, you can freeze the number of shares to exchange here and recalculate to see if the basket still meets the diversification requirements. The software will try to maximize the capital gains tax deferral amount, so if there is a reason not to contribute a certain stock, then the shares and percentage will be 0. This software also handles tax lot level information for the calculation, which will eventually be needed for the exchange, and has the ability to look through the ETF to the underlying securities to check diversification. After the securities are transferred, the new ETF is launched, and the ETF shares are returned to your brokerage account. All the same rules of an ETF apply. The shares are fully liquid and can be sold at any time. The new ETF shares will have all the original tax lot information, so the acquisition date and cost basis will remain the same. There is no step up in the cost basis. However, securities held by the ETF will continue to rebalance without triggering any taxable event. Look out for more features launching soon. If you are an ETF issuer planning a new launch, or an investor, advisor, or family office and have any questions, reach out anytime.